Hey everybody, welcome back to Just a Tip Tuesday, a weekly video series where I sit down with an industry professional of some sort and we consume liquid and talk about some stuff that I know nothing about. So today I am back with Jim Humphries from American Mortgage. So you may have seen the first video, hopefully. So this second video here, we are going to be talking about the difference between conventional, FHA, and USDA and VA loans.
Yes.
So just different loans. So let's talk about that.
Okay. Well, we'll start with the VA loan.
Okay.
Okay. Are you a veteran?
No.
No. But if you were a veteran, you can do a VA
Unqualified.
loan. That's right. A VA loan, if you do a VA loan, it's zero down, which is great. And,
Okay.
they have no PMI, no monthly PMI, which is the PMI is the private mortgage insurance
Okay.
that a person has to pay when they don't put money down, like on an FHA or a conventional where they put a little bit down. If you put down 20% on a conventional, you have no PMI. Okay?
Okay.
So what VA does is no PMI.
Okay.
It's a fantastic loan for anyone. VA rates are really low. They're actually lower than conventional.
Okay.
So a VA, if you do VA, that's the way to go.
Okay.
Okay? So the next one with zero down is a USDA loan.
Okay.
Okay, that's a loan, that's a government loan, that's where you buy in the USDA area, which means that it's going to be out in the country,
Okay.
in a rural area. Okay, as long as the property is eligible, then you can buy it. And the USDA, what's nice about that is zero down. They do have an upfront fee, but it's not as much as FHA. So it's a
Okay.
better deal on the upfront fee.
Okay.
Okay, the USDA rates, the VA rates, and the FHA rates are all pretty much the same, so they're really good rates.
Okay.
Okay, so the USDA, the monthly PMI,
Mm-hmm.
they call it something different, but it's a monthly fee for the insurance. Okay, it's lower than FHA. Okay, it's not zero like VA, but it's lower than FHA. So the second best loan is a USDA loan. Okay.
Okay.
So you're still getting zero down. So you've got VA and USDA both zero down.
Mm-hmm.
Really good loans. Okay, but you got to qualify to be a veteran, or you got to buy a house in a certain area.
And
Okay.
it's a lot of rural areas.
It is.
Okay.
It is. Now, if you want to buy a house anywhere, like in the middle of the city of Cincinnati or in the suburbs, then you have to either go FHA or conventional.
Okay.
Okay. So let's talk about the difference between FHA and conventional.
Let us.
Okay. All right. So on an FHA loan, okay, your scores can be lower and you still qualify.
And by scores, you mean credit scores.
Credit scores.
Okay.
And it's the middle credit score. Okay. So on an FHA loan, what happens is they charge an upfront fee
Okay.
that you don't have on conventional.
Okay.
Okay. So the better of the two is the conventional if you have really good credit. However, if you have sufficient credit and you can go FHA, there's nothing wrong with an FHA loan.
Okay.
Okay. FHA rates are actually better than conventional.
Okay.
Okay. And you need less money down. It's only 3.5%. Okay. The PMI, the monthly PMI, unfortunately, you pay it forever. You can't
Okay.
get rid of it.
Okay.
On
And every
conven-
time we say PMI, basically all that translates to is just a monthly fee associated with a loan. Is that right?
Yeah, it stands for
Okay.
private mortgage insurance.
Okay.
It's to insure the lender. If I buy a house and foreclose on it,
Mm-hmm.
then if I put 10% down, then they're out the other 10%, so they get an insurance policy.
Okay.
If I only put 5% down, okay, they need to insure more, so my PMI is higher. So the less you put down, the higher the PMI. Okay.
Okay.
So but on conventional, once you buy a house on conventional, if you put 20% down, you have no PMI. Okay. If you
Okay.
put 15%,
So 20% is like
optimum.
20% is optimum.
Yes.
With like a credit score above 700. So like the golden apples of home buyers would be like credit score above 700, have worked in the same industry for 2+ years, and I got this.
20%
down.
gives you the best deal. Okay, that's what I call the best of the best.
Okay, so that's the best of the
Okay,
best,
that's
but
right.
there's still hope for the rest of the world.
Yes.
Yes.
Yes. Let's say that you
Yes.
have great credit
Okay.
and you've got 5% to put down.
Okay.
Let's go with a conventional loan. Once you're there, 5, 6, 7, 8, maybe 10 years, you can get rid of the PMI altogether
Okay.
because your balance is going down, your value is going up. Once you've established 20% of equity, which is the difference between the two, you can get rid of the PMI. So you could pay extra money every month, get rid of it sooner.
Okay.
So you do have some control there, where you
Okay.
can get rid of the PMI. You see?
So the golden number with a conventional loan is getting to 20% down as fast as you can, and getting rid of this monthly
That's right.
fee. Okay.
That's right. That's right. So on the conventional, the FHA, the VA, the USDA, the closing costs are really about the same.
Okay.
Okay, so there's not much difference there. There's just a difference in the rate. You get a better rate and lower PMIs at the end of the day. That's what's saving you the most money.
Okay.
Okay?
Okay.
And by the way, if you have somebody come in the door
Mhm.
and you make sure you educate them on everything,
Mhm.
you let them pick. They might say, okay, I love this option. I can get there in 3 months from now. Or I can get there in 12 months from now. What do I need to do?
Mhm.
And that's where we help them with their credit, if the credit's an issue, or we have them save more money. But
Cool.
we make sure when they walk out the door, they understand exactly what they need to do to be able to have the loan of their option, of their choice.
Okay.
Okay?
Very cool. That is awesome. And Jim can do loans in Ohio, Kentucky, and Indiana. And the company that he works for, American Mortgage, they can do loans in 13 states. And definitely make sure to watch the first video if you know nothing about mortgage or loans or have no idea what we're talking about. Finding a good loan officer could definitely be difficult. That's probably a challenge that some people face, is finding a good loan officer. Would you agree?
Yeah, absolutely.
Yeah.
I would recommend that you talk to your realtor. That's
Mhm.
a good resource.
Mhm.
Or you could talk to friends and family. You know, everybody that owns a house has done a loan at some point,
Right.
unless they pay cash, which very few people do, right?
Right.
You know, so they'll know a loan officer. It's important to have a good person that you can trust
Right.
that knows what they're doing. Okay, the more
Right.
they understand, the more they know, then they're going to know the optimum deal for you. Or
That
if you're
makes
very
sense.
close, then they'll guide you to get you there in a short period of time.
Got it.
It may be worth that extra 2 or 3 months if you
Right.
can get a lot better deal.
Right.
That makes sense.
That makes sense.
Okay.
And one of my favorite things about Jim and American Mortgage is Jim's motto that he says all the time is he helps others help themselves, which I think is phenomenal. And that's kind of the person that you want to work with, you know, such a huge purchase. Well, thank you so much
Yeah.
for being here. And I hope that answered all of your questions. So if you have any other questions about mortgage, feel free to reach out to me and I can connect you to Jim, or you can just like Google him. His mugshot will probably come up. I know you have a couple of those. If you don't live in the Cincinnati, Kentucky, Indiana area, definitely looking at asking family and friends and seeing who they can connect you to that is someone that is honest, that's good to work with, because it is a huge purchase and you want to make sure that someone is in your corner and on your team.
Yeah, and it's the biggest purchase that you make in your lifetime, right?
Yeah.
You know, and the other
Well,
thing
my
too.
Tesla might be more.
Okay. Well, the other thing too is that, you know, once you get in that house, if you get a good deal
Mhm.
and you start out with some equity,
Mhm.
then when you go to sell it, you'll have more equity, which means you have more money to put down on the next house. But the idea that eventually you're going to have the 20% down, and eventually you have the 50% down,
Mhm.
and someday you won't have a house payment at all. Okay, so it'll help you
sounds
get there
amazing.
faster.
That sounds amazing.
Okay.
All right, awesome. Well, we will probably be talking to Jim at some point in the future because I know mortgages and loans can be very confusing, but I hope that got a lot of your questions answered this time around.
Yes.
And at least gives you a good foundation of just like a good starting point and where to go from here. All right, awesome.
Okay.
Bye everyone.
everyone.
Have a great day. Cheers. And remember,
Cheers.
drink vitamin water. I hope they sponsor me soon.